Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Tuesday, the 7th of June. Starting off with the FTSE 100, and it looks as though we're going on an imminent, or have an imminent chance of breaking the 6150 to 6300 range. Yesterday's high 6301, and in the aftermath of the non-farm payrolls, the shocker figure on Friday, we went towards 6150. So RSI also encouraging well above the neutral 50 level of 57. So just really an end of day close above 6300 should do it this time, even though we are wary of having a false break to the upside in April, which did look quite convincing. This stage only back below the 50-day moving average at 62.13 on an end of day close basis would delay the upside scenario, and a target towards the top of this rising trend channel as high as 6600 over the next 4 to 6 weeks. Moving on to the DAX, and not quite such a rosy picture here, presumably because this market doesn't have the benefit of mining stocks to keep it going, but still we've had the gap fill rebound. 10,077 was the floor of the May gap. We bounced 10,040 on Friday and closed at 10,121 yesterday. That should be enough really to give us a push back towards the top of this range, 10,300 initially, with a stop loss back below the 50-day moving average, 10,021, which is also the February uptrend line. We've got the RSI just above the neutral 50 level at 51, which is also mildly positive. If you're cautious on this market, obviously wait for a clearance of 10,300 or even 10,365, which was the May peak. Onto the US markets, which have definitely been leading here, as Yellen once again bottles it on the interest rate front by suggesting that the non-farms were not a big deal, and also that even Brexit could be a factor or could affect the US economy. Here we've got the push through this 17,900 level yesterday, end of day close above that level, and this resistance line, the red resistance line from April. This should give us the way clear now for a move to the top of the January trend channel at 19,000 over the next month or so. Double bounce off this uptrend line, and the RSI window as well at 50 is also very encouraging. It would be surprising now to see any weakness either below the 50-day moving average or at the most 17,500, the floor of the channel. But the 50-day line, 17,763, should cap or stem any losses we have over the next couple of sessions. Onto the S&P, it closed at its highest level of the year yesterday, well above 2,100. Previously, we were suggesting 2,200 while we held above the 50-day moving average at 2071. Now one could even raise that stop loss up to the 10-day moving average at 2091. With the target still at 2,200. RSI at 63, so not overbought at all. The Nasdaq here, in a way, this actually was the leading play after Warren Buffett bought into Apple shares, $1 billion worth of those. Here we've got the situation that while we're above the 10-day moving average, 44.88, we should see further significant upside. Initial target, obviously, the April resistance, 45.74, and then up to the 4,800 target at the top of a February rising trend channel. Only back below the 50-day line, 44.44, would turn this market outright bearish. But given the way that all the main near-term moving averages are rising, apart from the 200-day line, one would expect this market to move higher quite quickly. RSI 62, therefore not overbought either, even though we're at a high level. Onto the currencies, and the newspapers made a big deal out of the initial fall yesterday for cable back below the 50-day moving average at 144.21, but it was only a brief move. Basically, as you can see from the annotation, above this red line, one would say the market's betting on Remain, and that's at 143.50. Below it would then suggest that we're back in Brexit territory, but so far bounced exactly off the line after the bad poll figures for the Remain camp, and we have held as well even above 145 for early Tuesday morning. Therefore, back up to a target of around 147, 147.50, while we're holding above 143.50. But the fireworks would start if we did actually have an end of day close below 143.50. The only point, as I've said here at the moment, below in the RSI window, that this line has broken from January, and that could be a leading indicator on a breakdown. But still, early days yet as far as any anticipation of a breakdown for cable. On to the euro, and here we've got the market, which was the big winner in the wake of Friday's non-farm payrolls. We've held the 50-day moving average at 113.14, which was the initial target above the 200-day line at 110.97. Next target really up to that last peak, 114.46 from May. But at this stage, we don't want to get too excited about how much upside there would be, even though the top of the 2015 channel is currently heading as high as 117.50. So perhaps above 114, above 114, one could start thinking of the big target there. Stop loss on the bull argument at the moment, back below the price channel floor, currently around 112.10. On to dollar yen, which started to recover yesterday quite quickly from the beating it took on Friday. Looks as though we're in this falling wedge formation, which actually could be very bullish for this cross. So that would suggest that while we're above Friday's low, 106.37, we're going to head back up to 110 at least. End day close above 110 could really snap this market higher, given how many times we've been spoofed within this formation, which has been in place since January. Finishing off with gold, and the other pure winner of Friday's bad jobs data, just hugging the 200-day moving out, 50-day moving average rather at the moment, 12.46. End of day close above that takes us up to $1,300. Stop loss on the bull argument at the moment, back below the 10-day average at 12.23. The big target here, 13.50, which is the top of this rising trend channel, which fits quite nicely actually since or from December. That's it from me. More updates at the same time tomorrow.